Good afternoon, students. In the last class, we discussed together the detailed cost sheet with regard to each and every item, that is the prime cost, that is direct expenses, direct material and direct labor that together constitute prime cost, and then we add the different factory overheads with regard to that. And then we got it the factory overhead, factory cost or work cost. And then after that, we started with the word office or administrative overhead like office expenses, whatever is there. That is to be added. So office cost we are getting along with office cost or cost of production, and we are adding the selling and distribution overhead. Along with that, we are getting the cost of sales or total cost, and we are comparing with that the sales, that is the profit or loss. That is the usual way, the detailed cost. Then we see in the last class the format for adjustment with regard to the raw material, the what is that, the work in progress and the finished goods. So in such cases, what all are the changes with regard to that simple or detailed cost sheet? The changes is what in three areas. The changes it occurred in three areas. So one is at the starting, cost of materials consumed. How much material we need to calculate, or how it is to be. It is the opening stock of the raw material plus the purchases less the closing stock. We are getting that. That is the which one cost of materials consumed. So cost of materials consumed and then direct labor and direct expenses together we got to prime cost. Along with the prime cost, what overhead need to add? Factory overhead need to add. That factory overhead, all the items relating to or all the expenditure, indirect overheads that relating to the material, labor, and the expenses that are incurred in the factory premises, that is the factory overhead. This we added, and from this, scrap value of the material to be produced, that is to be deducted. Then after that, we need to adjust the work in progress. What is the work in progress? Work in progress means those are not produced fully but already started the production. Finished goods ആയിട്ടുമില്ല എന്ന production process start ചെയ്തിട്ടുണ്ട്. That is the work in progress. That opening should be added with this and deducting what the closing work in progress to get what the net factory overheads. This is to be added with the prime cost. We got the factory cost or work cost. Another name for work cost or factory cost is factory on cost or work on cost. Clear? Along with this, we need to add the office and administration overheads. What all expenses indirectly, material, labor, and other overheads means other expenses that are indirectly incurred in the production process, that is relating to the office, that is office overhead. This is to be added with what? This is to be added with the factory cost or work on cost. Then we get the cost of production, isn't it? Along with this, we need to adjust the opening finished goods. Means what? Those production process is over. It is ready for sale. That is the finished product. അതിന്റെ ഓപ്പണിങ്ങും അതുപോലെ അതിന്റെ ക്ലോസിങ്ങും. So add the opening and deduct the closing from the cost of production, and we got the cost of goods sold. From this cost of goods sold, what are the selling and distribution overheads to be added? Okay, that is to be added along with the cost of goods sold. We will get the cost of sales or total cost. From this cost of sales or total cost, we are deducting the sales to get either the profit or the loss, as the case may be. This is the detailed cost sheet with the adjustments. So we will see now. This is the thing. So we will check it how it is to be. See, this is the problem. Stock of raw materials, work in progress, and finished goods. So, see the opening with regard to each and everything and closing with regard to each and everything. And the items are here. Other data, purchase of raw material, productive wages, selling overhead, sales, factory overhead, chargeable expenses, and office and administration overhead. The rest all it is directly given. We need to adjust that thing. Okay, so firstly, statement of costs of sales and profit, that is the cost sheet. This is the per unit column, this is the amount column. So no need of a per unit, but the inner amount column and the outer amount column. Firstly, this is the particulars and the amount. Okay. Cost of materials consumed. Cost of materials consumed, how much it is? But that is opening stock of materials. How much is the amount? It is 12,550. And the purchase, here the purchase is there, 2,25,500. So purchase is to be add, purchase of raw material is to be add, that is 2,25,500. Okay. This, we need to add this, so 238,050 less closing stock of raw material, how much it is? 10,910. That is in the question. So we are getting 227,140. This is the cost of materials consumed. Along with that, what is the productive wages is there? Productive wages in the sense means direct labor. How much? 1,12,000. Then the rest is chargeable expenses. Chargeable expenses 15,200. So prime cost altogether total. So how much? 354,340. So listen, this is one case. See the adjustment with regard to RM. Raw materials, opening stock of material is there. Purchase of raw material is to be added. Along with this, we are getting this. And then from this closing stock of raw material to be deducted, we are getting the net amount with regard to the cost of materials consumed. Then productive wages is there in the question. Then chargeable expenses also there in the question. Then PC is there. And what factory overheads with regard to this. How much is the factory overhead? It is 87,600. So that is factory cost we are getting. So how much is this one? It is 441,000. So 4,41,940. This is the factory cost. Isn't it? Then the rest of the part. Along with the factory cost, what we need to add? The adjustment with regard to the item to be taken, like a work in progress, isn't it? So, and WIP opening, WIP opening, it is 6,600. Take the total of this. 441,940 plus 6,600, it is 448,540. 448,540 less closing WIP, how much it is? 7,200. So how much? 441,340 is the 441,340 is the which one? Which cost it is? It is not the work. Yes, it is the work cost. Correct. This is the adjustment is there. So FC is there, work cost, because WIP opening and the closing to be adjusted against the factory overhead. The factory overhead add ചെയ്തതിനു ശേഷം opening work in progress add ചെയ്തിട്ട് closing work in progress deduct ചെയ്യണം. Isn't it? ആ item ആണ് 441,340. ആ 441,340 കൂടെ ഇവിടെ വേറെ items ഒന്നുമില്ല. Add office and administration overheads. How much is the total? It is 34,500. 34,500. So 34,500. So it is cost of production we are getting. COP or office cost. So cost of production or office cost, it is 475 how much? 840. Then along with this, finished goods to be added because we need to adjust the finished goods before the selling and distribution. So FG opening, finished goods opening is how much? 13,660. 660. So how much? 489,500 is the total. Less closing FG, finished goods. Okay, it is 14,500. 14,500. Then COGS, cost of goods sold, we got it. So 4,75,000. Along with that, we need to add what? Selling and distribution overhead. How much it is? 40,000. So TC or COS, cost of sales, 4,75,000 plus 40,000. How much? 5,15,000. This total cost of sales minus the sales, we are getting the profit or loss. We are getting the profit or loss. So add or deduct profit. So sales, how much? We are putting the sales. Sales is how much? 5,92,250. I think that is given in the question here. Sales 5,92,250. So 592,250. So sure, sales is more than the total cost of sales. So there is a profit. So profit, how much it is? 77,250 is the profit. This is the change in the cost sheet where adjustment for work in finished raw material, opening and closing, work in progress, opening and closing, and finished goods, opening and closing to be adjusted in the cost sheet. So this is the case with regard to adjustment with regard to the RM, WIP, and FG for the materials consumed, isn't it? So at the time of taking the cost sheet, this also to be considered. Clear? We will do one more problem. See the question. Following are the information or following information has been ascertained from the books of Aravind Corporation Limited for the month of April. Stock of raw materials on 1st April, then 30th April, RM purchased, direct labor, direct expenses, factory or administrative expenses, stock of finished goods, selling and distribution, sales. So there is no work in progress. Only for RM opening, closing, FG opening, closing. Okay, we will do it now. So, firstly, cost of materials consumed. Opening RM, raw material, how much it is? 9,000. Then add the purchases. RM purchased. So how much? RM purchased is 64,000. So 64 plus 9, 73,000. Less closing stock of RM, how much it is? 12,000. So 61,000. 61 plus 9, 71 plus 2, 73. This is the cost of materials consumed. Then direct wages. Direct wages is how much? Direct labor, same. Wages or labor, how much it is? 22,000. Then direct expenses, that is how much? 3,000. So it is prime cost. 61 plus 20, how much? 61 plus this is 22 plus 3, 25. So 61 plus 20, 81 plus 5, 80. How much it is? 81 plus 5, 86,000. That is the prime cost. Then What is there to add? Factory overheads. Add factory overheads. How much it is? 11,000. So 7, 9. 97,000 is the work cost or factory cost. Clear? Work cost or factory cost. Then we need to add what? We need to add the office and administration overhead. Along with that, we need to adjust the finished goods opening and closing. So after that, after this, we need to do in this way. See, add office overhead, work in progress, opening, closing, nothing is there in the question, isn't it? So administrative overhead 6,000 we need to add here, isn't it? So how much? 97 plus 6, 97,000 plus 6,000, 103,000, 103,000 less, sorry, add opening FG. Opening FG is how much? 18,000. So plus how much is 18,000? 121,000. Okay, 121,000, and from this we need to deduct about closing FG. Then less closing finished goods. How much it is? Closing finished goods, it is 22,000. 22,000 minus 22,000, 99,000. So this is COP, cost of production or office cost. This add which one? Selling and distribution expenses. Selling and distribution overhead, it is how much? 7,000. 106,000, that is the COS or total cost. 106,000. Then the finally what? The profit. We need to calculate it because the sales is how much? Sales is 1,30,000 minus 1,30,000 is 24,000 is the profit. See, 24,000 is the profit. This is the case. This adjustment with regard to RM, FG and WIP need to be taken care. Clear? So this problem also we will do it. Raw materials used 70,000, manufacturing wages paid 30,000, then manufacturing wages accrued 2,000, factory overheads 20,000, opening work in progress 18,000, closing work in progress 24,000, office expenses 8,000, opening stock of finished goods is nil, closing stock of finished goods 20,000, selling and distribution 7,000, and sales is what? 1,30,000. So what is their direct material? That is the RM used. The how much? 70,000. Then what is there? Yes, manufacturing wages. So direct labor paid. Direct labor paid is 30,000. Then wages accrued. That is also to be taken care. That is related to which one? Outstanding wages. So 2,000. So prime cost is how much? 1,02,000. This is 1 lakh plus 2,000. And what? Factory overheads. And factory overheads, how much it is? 20,000. So it is 122. So this is then along with that, opening work in progress need to be added and closing work in progress need to be deducted. So add WIP opening, how much it is? 18,000. Then less closing work in progress. How much it is? 24,000. So 122,000 plus 18,000, 140,000 minus 24,000. It is 116. 116,000. So this is what office cost. Sorry, this is what factory cost. Because factory overheads plus work in progress opening minus closing work in progress. So that is the factory cost. Along with that, office expenses need to add, isn't it? So office expenses need to add here. So add office expenses. How much it is? 8,000. Office expenses 8,000. 1,24,000. Then that is the, we need to adjust the what finished goods, isn't it? So add opening FG, that is nothing. Then less closing FG. How much? 20,000. So 1,24,000 minus 20,000, it is 1,04,000. So cost of production is this one. This is COP, 1,24,000. Because after adding the office expenses with the factory cost, what we are getting? The cost of production. So closing finished goods, that is to be deducted. So this is COGS, cost of goods sold, and selling and distribution overheads. How much it is? 7,000. So 1,04,000 plus 7,000, it is 1,11,000. This is the COS or TC, total cost. COS or total cost, and then sales we are getting here. Sales is 1,30,000 minus 1,30,000. So 19,000 is the what profit. See. So in this way, we are calculating what? We are calculating the cost sheet with the adjustment with regard to what? Adjustment with regard to raw material, work in progress, and finished goods. Next is valuation of the closing stock of finished goods. In cost accounting, the closing stock of finished goods is valued at cost price. By the cost, we mean the cost of production of finished goods is in stock. So valuation of the closing stock of finished goods is equal to total cost of production divided by total units produced in the units of finished goods in stock. So how it is to be? Total cost of production, total COP, that is to be divided by total units produced multiplied with the units of finished goods in stock. So cost sheet with the valuation of the closing finished goods. That is, from the following information, prepare a cost sheet of Messrs. Arna Limited showing the cost of production and profit per unit. Units produced is 100, units sold is 80. വിറ്റത് 80, produce ചെയ്തത് 100. But there is a difference of 20 itself. Then direct materials consumed is 400. Direct labor hours worked is 1,000. Hourly rate of labor is 10. Factory overheads rupees 5 per labor hour. Office overhead 10% of the work cost. Selling overhead at 15 per unit, and margin of profit 25% on cost. So how we are calculating the cost sheet? See, stock of finished goods is equal to number of units produced minus number of units sold. 100 units is produced and 80 is sold. So there is a saving of 20, isn't it? So stock is valued at the cost of production. That is, we need to calculate that first. Okay, so we will check it at the cost of, till the cost of production we need to calculate. Clear? So how it is to be? Direct materials is how much? Direct materials, 2 columns are there. Okay, here what are the required information? Direct materials is 400. How much units is produced? 100. Right? So one is the per unit column, one is the total column. So per unit is 100 per unit, isn't it? So direct material 40 coming here. So 40 into 100, isn't it? 40,000. Sorry, 400. Okay. Then 400 per unit, not 40. 400 per unit, 400 into 100, that is 40,000. Then direct labor hour. Direct labor, how much it is? 1,000 labor hours, hourly rate 10. So how much? 1,000 divided by this one, isn't it? 1,000 divided by 10, it is 100. Then here 10,000. 10,000, that is already 1,000 into 10. So 10,000. Then prime cost only this much. So PC is what? 50,000. So it is 500. Isn't it? 50,000. So 500. Then factory overheads. Add factory overheads. Rupees 5 per hour. 5 rupees 5 per hour. So 5 into 100. Isn't it? So sorry, 5 into 1,000. 5,000. 5,000 and 50 is coming here. So it is 55,000 and 550. 550 into 100, that is 55,000, isn't it? So that is the work cost. Then office overhead 10% of work cost. Add office overhead 10% on work cost. So 55,000 to 10%. So 5,500, isn't it? 5,500. So here also 55. So that is what office cost or cost of production. So how much it is? See, 605. 605 into 100, 605,000. Okay. Then closing finished goods, we need to calculate. So how the calculation is that? Closing finished goods is equal to, see, stock is valued at cost of production at 605 per unit. COP is per unit is 605. How much units is to be this one? Closing stock is there 20 units, because number of units produced is 100 and 80 is the number of units sold. So 100 minus 80, 20. 20 into 605, that is the what? 12,100. 1200, that is the less closing stock of FG, finished goods. Closing stock of finished goods. So 60500 minus this one, 48,400. Here 605. Then 48,400, that is the cost of goods sold. Then what is there? Selling overhead at rupees 15 per unit sold. Selling overhead at rupees 15 per unit sold. So add selling overhead at 15 per units sold. So how much it is? How much units is sold? 80, isn't it? So 80 into 15, that is 1,200. Here 50. So 48,400 plus 1,200, it is 49,600. Then sales is how much? Margin of cost, 25 profit on cost is 25% on cost. So how much? 49,600 into 125%. Yes, 25% on cost means 125% on the selling price. അതായത് 49,600ന്റെ 125% എടുക്കുന്നതാണ് സെയിൽസ്. അപ്പൊ 25%, അതിന്റെ 25% എടുത്താൽ എന്ത് കിട്ടും? പ്രോഫിറ്റ് കിട്ടും. അതാണ് ഇവിടെ പറഞ്ഞത്. മാർജിൻ ഓഫ് പ്രോഫിറ്റ് ഈസ് 25% on cost. 25% on cost means what? Of this thing. That is cost of sales. Cost of sales ന്റെ 25% അല്ല, 125% എടുക്കണം. സെയിൽസിന്റെ 25%. Check it. 62,000 is the sales. 25% it is. See, 12,400 is the profit. So sales is how much? 62,000. 62,000. So 12,400 divided by how much it is? 80 is the unit sold. 80 യൂണിറ്റ് പ്രൊഡ്യൂസ് ചെയ്തു അതിന്റെ ഇതാണ്. So it is 155. 49,600 it is 620 it is coming and 155. So how much it is there? 775. So 80 into 775 that is the 62,000 total. Check it. 80 into 775. 80 units are sold. 80 into 775, 62,000. So this is the case where we need to calculate the closing stock of finished goods. This type of problems will ask for, I think, 5 marks in the section B of your questions. Clear? So this is the case where what need to be calculated? Closing stock of finished goods to be calculated and the same as it is. Clear? Then, following extracts of costing information relate to a commodity A for the year ending 31/3/2014. Purchase, direct wages, stock on 1/4 that is of raw material 8,000, finished goods 1,600 kilograms 6,400, stock on 31/3/2014 raw materials 8,800 and closing stock of finished goods that is we need to calculate it, and works on cost 16,800, work in progress 1920 for the opening, 6,400 for the closing, office and administration 3,200, sales finished products means sale, total sale is 1,20,000 and selling cost amounts to 0.40 per kilogram. During the year, 25,600 kilograms of commodity were produced. So prepare the cost sheet for showing the profit. So how it is to be calculated? Cost sheet, purchase, what is that? See, cost of materials consumed, colon, opening, RM, how much it is there? Opening stock 8,000 and purchase, okay, purchase how much? 48,000. So 56,000 less how much? Closing stock, that is already given in the question. How much it is? 8,800. So how much? 47,200. Direct labor, how much it is? 40,000. So how much it is? 87,200. This is the per unit column, nothing to be calculated for as of now. Then this is the prime cost and what? Factory overheads. Factory overheads how much? That is work on cost. Factory overhead 16,800. Okay. Then along with that, add opening WIP. Opening work in progress is 1920. We added that. So it is 105,920 less CL work in progress. Closing work in progress is 6,400. So FC, factory cost or work cost is 99,520. 99,520. After that, we need to add what? Office and administration overhead. And office overheads. How much it is? Office overhead, it is 3,200. So 99,520 plus 3,200, it is COP, cost of production. It is how much? 102,720. Then along with that, what need to be added? Opening work in progress, opening finished goods, and opening finished goods. How much it is? 6,400. So we added that. 109,120 less closing FG. Closing FG, we need to calculate separately. So for that thing, this is the working. Valuation of the closing stock of finished goods is equal to total COP. Total COP, how much? Total cost of production into the closing stock units divided by total production units. So how much? Total cost of production 102,720 multiplied with the closing stock units. Closing stock in units, that is office and administration 3,200. This is the one. Okay, divided by total production in units, that is already given in the question. See, office and administration are 3,200. Then we need to take that this 102,720 divided by 25,600 into 3,200. So we will get the closing FG. Once again, look here, total cost of production, that is this amount 102,720 multiplied with the closing stock in units, this is the one 3,200 divided by total production in units, that is already given in the question as 25,600. So 12840 is the closing FG, 12840. So we got the what? COGS, cost of goods sold, that is 96,280, and selling expenses and selling and overhead cost at 0.40 per unit sold. വിൽക്കുന്നതിന്റെ 96,280 അല്ലെങ്കിൽ എത്രയാണ് വിൽക്കുന്നത്? ക്വസ്റ്റ്യനകത്ത് എത്രയാണ് പറഞ്ഞിരിക്കുന്നത്? Selling expenses. Number of units sold is equal to units produced plus opening units of finished goods minus closing units of finished goods. So that is 24,000. How it is to be? 25,600 plus 1,600 is the opening units of finished goods. Okay. Minus closing stock of finished goods, it is 3,200. Closing stock of finished goods, it is 3,200. That is already given in the question. See, 1,600, 6,400 divided by, or 1,600 is the unit. 1600 kilo ആണ് പ്രൊഡ്യൂസ് ചെയ്യുന്നത്. അതുപോലെ ക്ലോസിംഗ് സ്റ്റോക്ക് 3200 കിലോ. അപ്പോൾ ഓട്ടോമാറ്റിക്കലി എങ്ങനെയാണ്? അതേ രീതിയിൽ ഇവിടെ എടുക്കുക. അതായത് 25,600 ആണ് ടോട്ടൽ പ്രൊഡക്ഷൻ, 600 ടോട്ടൽ കിലോ പ്രൊഡ്യൂസ് ചെയ്യുന്നു. അതിൽ 1600 ഓപ്പണിങ്ങും 3200 ക്ലോസിങ്ങും. അപ്പൊ 24,000 യൂണിറ്റ്. ആ 24,000ത്തിന്റെ selling expenses എന്ന് പറയുന്നത് എത്രയാണ്? 0.40. So 24,000 into 0.40, it is 9,600. So that 9,600 to be added, we will get what? The 9,600 we will add it, we will get the selling and distribution overhead. Then finally, what? COS or total cost. So 96,280 plus 9,600, it is 105,880. 105,880. 105,880. Yes, divided by total units at 24,000. So 96,280 divided by 24,000, it is 4.01. So total units in the 24,000 units ആണ് നമ്മൾ വിൽക്കുന്നത്. നെറ്റ് എമൗണ്ട്, അതായത് 25,600 പ്രൊഡ്യൂസ് ചെയ്യുന്നു. അതിൽ ഫിനിഷ്ഡ് ഗുഡ്സിന്റെ ഓപ്പണിംഗ് അത്രയും ഫിനിഷ്ഡ് ഗുഡ്സിന്റെ ക്ലോസിംഗ് അത്രയും അത് അഡ്ജസ്റ്റ് ചെയ്തതിനു ശേഷം 24,000 യൂണിറ്റ് ആണ് പ്രൊഡ്യൂസ് ചെയ്യുന്നത്. അതിന്റെ 24,000ന്റെ 0.40 പെർ യൂണിറ്റ് ആണ് സെല്ലിംഗ് ആൻഡ് ഡിസ്ട്രിബ്യൂഷൻ ഓവർഹെഡ്. സോ TC എന്ന് പറയുന്നത് 105,880. 105,880 divided by 24,000, that is how much it is? 4.41. And the sales is finally sales 1,20,000. That is already given in the question. 1,20,000 divided by how much? 24,000. So it is 5 per unit. So 5 per unit. 24,000 is the per unit cost. So profit 1,20,000 minus 105,880. It is 14120 divided by 24,000 is 0.59. So this is the way we are calculating the what? This is the way we are calculating the profit with regard to the cost sheet, where there is adjustment of opening stock of or we need to calculate the closing stock of finished goods here. So for that purpose, we need to add this formula, total cost of production. This is the total cost of production into the closing stock in units. എത്ര ഇതാണ് ഓഫീസ് ആൻഡ് അഡ്മിനിസ്ട്രേഷൻ അല്ല സ്റ്റോക്ക് തന്നിട്ടുണ്ട് 3200 ആണ് ക്ലോസിംഗ് സ്റ്റോക്ക് ഓഫ് ഇതിന്റെ വന്നിരിക്കുന്നത്. ഓക്കെ, ക്ലോസിംഗ് സ്റ്റോക്ക് ഓഫ് units divided by the total production in units, that is 25,600. So that we already applied. We are getting what the COGS, we are getting the closing stock of finished goods, then the normal formula, normal way we are calculating the costing, and number of units sold is equal to units produced plus opening units of finished goods minus closing units of finished goods. So 25,600 is the total production, 1,600 is the opening units of finished goods, 3,200 is the closing units of finished goods. So the net value is 24,000 units that we are taking care, and that 24,000 we are using as the per unit cost, and finally we reached the profit 14,130. So in this way we are calculating what the cost sheet, where the profit relating to that cost sheet is to be calculated. So please have a look at today's classes. Please see how the adjustment with regard to the RM, WIP and FG need to be taken care, and also please do as much as problems from the practical problem session also. Please clear your doubts as and when occurred through personal WhatsApp like the same before, and please confirm the video after uploading. So thank you for that.